This is Richard Butler from Total Real Estate Solutions in Kissimmee, Central Florida, and on this short video I'm going to discuss the question, do I need good credit to purchase a home in the current credit climate? And like all good politicians, the answer is yes or no. I mean, things have changed, underwriting guidelines have changed dramatically in the last 6 to 12 months, and it's certainly harder to get a conventional mortgage than it was some 12 or 18 months ago. So let's look at the various options. If you have good credit, and that means anything above 720 credit score, then you are going to be able to get pretty well the best interest rate, the best terms possible out there with conventional finance with the lowest down payment. With credit score of anything below 720, then things change. 680 credit score and above, you're still going to get a pretty decent loan program with a decent interest rate and as little down as 5 to 10%. If you're looking to qualify for FHA financing with 3% down payment, then their guidelines now are looking for something around about a 620 credit score and above, and they're going to take into account other situations, late payments, and they're going to underwriting going to take a fairly close look at your credit report in general. Now, one thing to bear in mind is that below a 620 credit score, it really is very difficult to get conventional financing at this point in time. Does that mean that you are not going to be able to get a conventional mortgage? Well, no, but it may mean that you've got to put some time and effort into repairing your credit report. One of the things that's worth mentioning is that the Massachusetts Institute of Technology did a report a couple of years ago that determined that over 78%, 79% of all credit reports have errors on them, and about 20% of all credit reports have errors on them that are so serious that they would actually result in the denial of credit. So one of the first things that you do need to do is obtain a copy of your tri-merged credit report, and if you need help doing that, please contact us and we can arrange that for you. Once you look at your credit report, then we have people within our company, within Total Real Estate Solutions, that can examine that credit report and give you a determination on how likely it is that that score can be improved over the next 75 to 90 days. And I have to tell you that most credit reports can, and sometimes that increase can be as much as 50 to 100 points. And the difference of 70 or 80 point difference in your credit score can mean the difference of being able to get a conventional mortgage or not, or it can get you from more expensive terms to the best terms available currently. So it is something that everybody at the start of the buying process, it's probably the first thing that you should do at the time that you're determining how much you can afford, is to take a good look at your credit situation and get pre-qualified with a mortgage broker and look at that credit report repair. Now, even if you're in a situation where your credit or your circumstances mean that there is something on your credit report that's going to preclude you from buying in the next few months, foreclosures, bankruptcy, late payments, you're not automatically in a situation where you won't be able to buy. But what it does mean is that you'll need more down payment. You're probably at that point going to need to look at homes that are being offered with owner financing, maybe even lease options or rent to owns, transactions that can transition into conventional finance down the road with your future history of good payment. So you either need great credit or good credit, or you need money. Having both is even better, but gone are the days that it will be easy to buy a home with poor credit and no money. So it's certainly a situation that you should discuss, and we're there to discuss these issues with you and determine exactly what you can do.